Hello there, Maverick traders. It is October 12th. This is the Market Roundup. This is Rob. Nice to see you here. Let's jump into what's going on today. In this session, we are going to go through the news of the day. We'll take a look at the broad markets, and we'll take a look at what happened in the commodity markets as well. We are going to look at the current market situation and see, do we have a technical score? We'll also take a look at some of the sectors. And then, of course, we're always looking for setups. I've got 2 bullish setups and 1 bearish setup for you today in this market roundup.
Disclaimer. This video was created for professional stock and option traders. Maverick Trading is a proprietary trading firm that employs professional traders around the world. Our traders trade firm capital and keep 70 to 80% of profits they generate. All trades and analysis in this video are for professional traders only. If you are interested in becoming a professional trader for Maverick, click the apply button in the video description. Let's break down what happened today.
Today was a pretty volatile day in the markets. We had the markets close down about 0.5%, but let's go through the whole story because the S&P at one point, it opened up about flat, went down a little bit, then was up about 0.3%, then it was down 1%, and then it recovered by the end of the day. The NASDAQ was actually really strong most of the day, and then just midday, it just turned around. We were up 0.6%. At one point, we were down 1.1%, and we closed down 0.63%. You can see, though, that the Russell never recovered. It got absolutely hammered, down 2.2%. Oil, gold were flat. As you can see, it was a negative day in the markets. 78% of all stocks went lower today. We still have 4 out of every 5 stocks trading below their 50-day moving average, still showing that we are in a bearish market. Why did the markets have such a tough time today? Well, it was because of the CPI. The CPI report came out. The headline news was 0.1% higher than expected at 0.4. Core came in at 0.3. At first, the market shrugged this off, and the market was actually okay with it. And then all of a sudden, we got a huge surge in the bond market. We were looking at a 4.55% 10-year bond at the first part of the day. And then by the end of the day, it was up to 4.7. 4.7, 4.8 gets the markets really worried. The market seems to be better now with 4.5%. So we're now back up at the higher end of the range, and the market is feeling the pain. We take a look at the chart. I really want to talk about this chart because we did break through some pretty serious resistance when we broke above 43.40. Again, these were really key points here. And we went up and we now have this red candle. If this was truly a breakout, this support line has to hold. And you can see today it held. We got a long lower shadow off the bottom today. Tomorrow's candle is very, very important. If we hold these levels, then all of a sudden it's starting to look like that is going to hold. If we fall back under it, it is a confirmation that this is just a bear rally, and we are likely going to see some lower lows. I know I'm going to give you my opinion. I'm never shy about giving you my opinion, but realize that the technicals are what is going to guide what I do in the market. Right now, I'm at a -1 in the market, mildly bearish, and I've been talking about how we're reaching the end of the weak seasonality period from September 1st to October 15th. We're reaching the end of it. I have no idea if this year is going to be the same as it was last year, but I'm thinking, okay, October 15th is likely going to be around the low. Of course, it's not going to be on the exact date. If this market holds 43.40, I then can all of a sudden say, hey, it looks like we're at least going to hold the support level. And at that point, I can be a 0 on trading. I can't be a +1. I can't be wildly optimistic. I can just be mildly sideways or mildly bullish. That's it. If the market breaks below 43.40, I'm back on to being full bearish. So if you take a look at where I'm sitting, the good news was, let's just call it the bullish case, is that we stop breaking down and we muddle along here and maybe go a little higher. That's the best bull case I can make here. The bear case is that was a bear rally and we're going to make new lows. So as you can see, there is asymmetric risk here where I think the upside is maybe 1% or 2%, and I think the downside could be another 4 or 5%. That being said, I'm not ignoring the end of the seasonality patterns. I think the market is going to hold. That is my opinion. But if 43.40 breaks, I have to get more short. I don't have a choice. My feelings are my feelings, and I don't trade my feelings. Here is the 10-year bond, and you can see up here at 490, the market was really worried. The market did not like that whatsoever. We backed off all the way down to like 455, and that's when the market really started to like it, when these bond yields were going lower. As you can see here, we got a nice bullish engulfing candle. If we go back up to 4.8, it's trouble. It is absolute trouble for the market. We've said for the last 6 weeks that the bond market is guiding the stock market. Whatever the bond market does, the stock market's going to do the opposite of it. If the bond market goes higher, stocks are going to go lower, vice versa. If we take a look at the heat map shows that this was selling across the board. There was some real strength in semiconductors. Semiconductors were actually fairly strong here with some green, but there was really nothing other than energy. And I've got a bunch of energy stocks that are looking like really good longs here at the moment. So we've got a little bit of chips, a little bit of energy, a little bit of healthcare. Just the healthcare stocks. That was really about it. Everything else was pretty red across the board. So looking at this score here, we were at a -3 last week. We're now up to a -1. So we are mildly bearish. That is the technical score. Regardless of how I feel, that is my technical score. You should be not full bearish like you should have been over the last couple of weeks, but you should now be mildly bearish. We had a +1 on the week. We said this is likely going to be a positive week. As you can see, we've got one more candle on the week. Tomorrow, I'm telling you, if 43.35 doesn't hold, we're going to be in some trouble. It is going to be a confirmed bear rally. Now let's take a look at some trades.
Have you been trading in the markets for at least 2 years? Are you starting to see some decent progress? Is that progress so small because of your limited account size? Maverick Trading is a prop firm that provides capital to profitable traders. You trade a minimum $25,000 account and keep 70 to 80% of the profits. After 2 consecutive profitable months, you move to a $50,000 account. As you keep progressing, you will be able to trade 6- and 7-figure accounts. To learn more about trading for Maverick Trading, either click on the Apply card in the top left, click Apply at the end screen, or click the link in the description to watch our recruiting video that explains more about Maverick and prop trading. If you like what you see, apply for a position and meet with our recruiters. Are you our next trader?
I'm still finding more good longs than shorts, which again is another reason why I think we do hold. The first long is US Steel. Now this is one of the hardest trades to make, especially as a new trader. I remember when I would see a stock like this, and I'm looking for something to go long. I'm saying, look, I'm not buying this. I'm not going to be the idiot. This thing used to be 22. Now it's up to 32. I'm not going to buy it up 50%. And so I would be out there trying to find the things that were a quote unquote deal, things that have had deep pullbacks, while these just marched and marched higher. These are the hardest trades to make because there is no technical entry. There is no technical point where it's like, yes, that's a good entry. You just have to get in these. You just have to get in these. So let's talk about how to get in these safely. You don't want to get in these super aggressively. This is where we love diagonal call spreads to get you in. So you do something like a 32, and then again, it's tomorrow. You still might be able to get something out of the 34s for this week. If not, go out to next week. But just put 34 as the top here. And down here, probably 32.50 is going to be your break even. As you can see here, it's not really a bullish call. It's a call that is just not going to go down. That's really what the call is. Hey, I think this thing's going to hold this $32. I don't think you should be wildly bullish on this. As you can see here, it's creeping up pennies every single day. But this is the kind of trade where you can do a +1 style trade. Be mildly bullish with a diagonal call spread, or you could do like a targeted butterfly at 34. Do like a 32, 34, 36 targeted butterfly, to where again, you're profitable in this area. Again, this is a very, very mild bullish trade, which is about the most you can get on anything. I talked about this stock last week, United Health, and I had it as a buy last week, and you can see it's had a nice run. Actually, this would be last Thursday. It had a nice run. Guess what? I still like it. It is doing one of my favorite patterns, the high-end type base, where we go sideways for about 5 days. I like this to the upside. That being said, we are not in a very bullish market, so I'm going to be a chicken. I'm going to be a wimp. I'm going to do something like a 520, 525 diagonal call spread. That is like the wimpiest trade ever. That's actually more of a sideways trade than anything else. You could go up to 530. If you say, I want to get a little bit more bullish, okay, go out and do diagonal call spread up to 530. 530 is going to be your max gain point, and you can see it's just, you don't want it to go down. It's not a bullish call. I think it's going to stay in this area call. That is the call. Again, +1 on any bulls. I'm not looking to be aggressive whatsoever on the bull side. Am I looking to be aggressive on the bear side? Yeah, the answer is yes. The market is set up to be more aggressive on the bear side. This here is Chewy. This stock is in what we call the March of Death at Maverick. And all that happens is every time it has a rally or a base, you sell it. Base, sell it. We've had a very, very long base here. And I've just been waiting. It always shows up on my scans as one of the weakest stocks out there. But is it ready yet? And the answer is no. It wasn't until today. Today's big fat candle, tomorrow with the breakdown, it looks like this thing is ready to make the next low. And again, I've got a target of 16 on that low. So I'm going to do a 16-18 bear call spread. That's going to be a lot of delta. So again, this is going to be a more directional trade on the downside than the other ones on the upside. Let's talk about tomorrow. Tomorrow, I actually think, is going to set the tone for Monday. So let's say there's two things that could happen tomorrow. So let's say the market holds in. Even if it's just flat or down a little bit or up a little bit or up a lot, if this market holds that 43.35 and doesn't fall apart tomorrow, I can see next week people coming in and nibbling. Again, I am not going to be bullish in any way, shape, or form. I'm just going to be not bearish. If this market can hold Friday, okay, I think we can see a little bit of nibbling next week. And again, either a 0 or maybe a +1 at best. If we break below, it's a bear rally. And you have to assume that there is another low coming, and we're back to -3. So as you can see here, we have asymmetric risk. The risk of the upside, if it does take off, it's very little. The downside is very large. So I still think it pays to be mildly bearish at this moment. If we hold on for another week and we can start to build some support around this 43.35, maybe in a week or two, we can get more bullish. But until that happens, you've got to stay on the bear side. That's the market roundup, everyone. Take care. Goodbye.